Hello, everybody. Good morning to everybody in Nigeria, wherever you are. We wish you a very fantastic day as we jump into today's session of TaxNaija, understanding the Nigerian new tax law and how it affects you and your business. Thank you very much for joining. It's going to be an exciting time today. We have some amazing speakers in the house that will be doing a lot of justice to the conversations around the new Nigerian tax law. Wherever you are right now, watching us on YouTube, you're going to be able to ask your questions, and your questions will be treated during the live session, the question and answer sessions in today's event. So before we start, please go ahead, feel free to chat in the box, the chat function, exactly where you're chatting from, where you're based, and what you do. You can introduce yourself and say hi on the chat function in the YouTube channel. Let's just allow you to do that for a few seconds, and then we'll continue with today's program. Thank you. So once again, thank you very much for being part of today's event, the TaxNaija webinar. It's happening live here on YouTube, and we have two fantastic speakers that will be doing a lot of justice to the conversation around taxation issues in Nigeria, especially as regards the new tax bill. There are so many questions running around as regards the new tax bill, and we would love to address these issues. And we're going to have a few sessions where you can ask your questions. But before I move forward, I'd like to quickly and warmly welcome everybody that's present in today's event. As I said, wherever you are, please feel free to chat on the chat box, telling us where you are. Today is Tuesday, October 28th, 2025. This stream is coming to you live from Nigeria, Abuja, Lagos, and we are excited to have our speakers in the house with us today. Once again, welcome. You're going to have the opportunity to chat, so please feel free to chat on the chat function on YouTube, letting us know where you are, your name, introduce yourself, and if you have any questions, there will be sessions where you can ask those questions on the chat function, and they will be addressed. But before we move forward, let me just quickly give you a rundown of what today's event will look like. We're going to have a very quick kickoff session, which is what we're doing right now, and that will be over very shortly. And then we'll jump into the first introductory session, which talks about the tax changes in 2026 and how this could make or break your business. That's going to be taken by one of our amazing speakers, Kelechi, today. And then we will have another session that talks about millionaire mistakes that women-owned businesses could possibly make when it comes to their taxes, and how to avoid these challenges. And this will be taken by Mr. Akinlabi today. And then we'll jump into a hot seats session when you can ask your questions for just about 20 minutes. After that, we'll be having another session, how to legally cut your taxes in half. How can you ensure that your taxes are manageable in 2026? And then we'll have a final question and answer, real life tax rescue session where you can ask your questions, and these questions will be addressed by our fantastic speakers we have in the house today. So once again, I would like to welcome you and thank you for being part of today's event. This event is brought to you as a collaboration between WTS Blackwood Stone, Africae Support Program. She's included, ConnectHER, and of course the Presidential Committee on Economic and Financial Inclusion, PCEFI. Once again, thank you very, very much for being part of today's event. We're going to be jumping quickly into a session that's going to be provided by what I like to call as a legal and tax luminary in Nigeria and across Africa, globally actually. It's my pleasure to introduce to you Madam Kelechi Okparaocha. She's the managing partner of WTS Blackwood Stone. And WTS Blackwood Stone is a massively reputable legal and tax organization globally. And they're reputable in handling very, very complicated and advanced legal and tax issues. Kelechi is a highly regarded and dual qualified barrister and solicitor both in Nigeria, England, and Wales, with over 20 years in legal and tax practice. She's a recognized tax practice leader advising top corporations and government bodies, and serves as chairperson of the NBA SBL Taxation Committee. Madam Kelechi will be giving us a brief introduction about the typical changes that are taking place in the tax scenario space over the next from 2026. And it's my pleasure once again to welcome Madam Kelechi Okparaocha to speak. Madam Kelechi, over to you.
Hello, good morning, everyone. Good morning, Ashwa. Good morning, Akin. Thank you for having me. It is a pleasure to be here. There's just a little changes to the introduction that Yeshua has already done. I'm going to say it's a pleasure to note that remarkable women that are gathered here today, building businesses, creating opportunities, that they're interested in taxation. It's very interesting to know that I'm in the middle of like-minded people. Interestingly, when people hear the word tax, the first instinct would be to be a bit troubled or to think, oh, is it complex? Am I supposed to be subject to this? What am I paying my taxes for? What am I getting out of this taxation? But that's one of the things that we're going to be trying to dive into today. Our session was all about understanding the taxes, what is changing, because there's a big buzz about the 2026 changes. So the Tax Act 2025 and changes would come into play in 2026 from the 1st of January. There's a whole buzz, you know, even myself, yesterday, I went to drop my daughter off at school in the morning, and some of the parents, because they know that I'm a tax consultant, came up to me to give them a lowdown, you know, and I'm thinking to myself that it is serious business, but nothing to worry about. So I'll begin with a brief introduction, riding on the back of the earlier introduction. And after that, my colleague, Akinlabi, so we're both from WTS Blackwood Stone, he will take over and walk us through all the sessions in detail. And I would be available for question and answers as well. So we've structured today's discussion. It's a robust discussion. We've structured it into 3 key parts. The first is the 10 changes in 2026. There are more than 10, but we've pulled out the 10 remarkable changes that could make or break your business. So it will highlight key updates that every business owner should know, from the new VAT registration threshold and digital service rules to the simplified company income tax bans that now exempt small businesses. I can imagine that most of us here would have what the government has defined as small businesses. So in doing so, we will also look at how freelancers are now included under personal income tax, the extension of capital gains tax to digital assets, and of course, we'll explain what these digital assets are, and then the new 6% levy on foreign digital companies. I wouldn't really call it a levy, new 6% tax on foreign digital companies, and then we'll talk about significant economic presence in Nigeria, and discuss how these changes would affect your businesses. The second one would be 1 million naira mistakes that entrepreneurs make with tax and how to avoid them. Many entrepreneurs unknowingly fall into tax traps from mixing businesses and personal fund. You mix your business and personal funds to skipping proper record keeping. So we're going to dive into the biggest red flags and point them out in such a way, break it down and point it out in such a way that you and your businesses would understand these and be able to apply them on a daily basis. And then finally, we'll end with how to legally cut your taxes in half in 2026. So this session would cover smart and legitimate tax planning strategies for efficiency, from choosing the right business structure to claiming available incentives. And then we would also discuss incentives for women-led businesses and enterprises, if any, and then also incentives for small businesses in Lagos, if any. We trust that by the end of today's conversation, you have clearer insights. You will be confident to carry on with your business and understand that the tax changes are not a trap. The tax changes are changes that are things that you can apply and at your fingertips. And also, you would also understand how we, as WTS Blackwood Stone, can support you if required. Thank you. Over to you, Akin.
Thank you so much, Kelechi. Always a pleasure to have you on our events. And I'm excited because I know the caliber of tax advice that you provide globally. So thank you very, very much. So I'm going to quickly, please, viewers, Madam Kelechi is going to see, she's still in the meeting and she will be answering questions alongside Akinlabi today. Now, I want to quickly introduce Akinlabi himself. Akinlabi Ijidakinro is an accountant and tax consultant with over 8 years of experience currently at WTS Blackwood Stone. He advises clients in key sectors, including oil, gas, and tech, on complex tax planning, audit investigation, compliance, and risk management. Before today, I ran a bit of a research on the previous works that Mr. Akinlabi has done. I've seen that he has conducted due diligence reports with respect to the purchase of financial institutions, monthly VAT and payee filing and remittance, a wide range of services around taxation. And so it is my singular pleasure to welcome Akinlabi as he speaks today. He'll be running through most of the sessions while Kelechi will be joining for the question and answer session. So Akinlabi, welcome. You have the stage. Thank you very much.
Thank you very much. Morning, everyone, and welcome. My name is.
Akinlabi, we actually can't hear you. We can't hear you clearly. We can't hear you clearly. Yeah, we hear you now, but it's like you're a bit far from the mic or something.
Okay, can you hear now?
Yes, better now. Yes, better now. Yes, thank you.
Thank you very much. So, like I said, good morning, everyone, and welcome to the Tax bootcamp for women entrepreneurs, understanding how the new tax laws affect your businesses, how to make use the benefits out of it. And this morning we have various sections. One of the sections that 10 tax changes make or break your business 2026. 10 tax changes that will make or break your business. I'm going to share my screen. while I'm trying to share the screen. While I'm trying to share the screen, we'll be looking at 10 key tax changes that will make or break your business. Ishua, please, can you allow me to share the screen?
Oh, hold on. Let me stop sharing. And someone just asked if they can't really hear you. They can't really hear your voice. Somebody on the YouTube channel is asking that she can't really hear you clearly. Perhaps it's your earpiece. Not sure.
Okay, I've removed that. Clear.
Sorry?
Just hold on.
Okay.
Please, can you confirm if you can see my screen?
Yes. Well, you need to go to the slide, put it on slideshow.
Yes, that's what I'm doing.
Okay.
Okay.
Great. I think we can hear you better now.
Thank you very much. You said what?
No, and I said I think we can hear you better now.
I can barely hear you.
No, I said I think we can hear you more clearly now.
Please, can you take that again? Sure.
No, I said we can hear you. We can hear you.
Okay, thank you very much.
Okay.
So now we move straight into the session for today. 10 tax changes that could make or break your business in 2026. So as we are all aware, the NTA 2025 in the Nigerian Tax Act 2025 has made key changes with respect to how VAT is administered. This includes registration threshold, digital services, zero rate on essential goods. So, part of the highlights that we are looking at, the key changes that we are looking at, one of it here has to do with the VAT, value added tax. So, under the value added tax, the registration threshold, a small business with a turnover of 50 million and below is not required to file returns until it exceeds the threshold. A small business with a turnover of 50 million and below not to file VAT returns until it exceeds the threshold. However, it can voluntarily opt in to comply with VAT requirements. What we are trying to say there is that now the new tax act has made provisions such that it has accommodated from the current rate of 25 million, it has accommodated small businesses to 50 million. That means that if you are earning up to 50 million annually, you are exempted from VAT. However, you can voluntarily opt in to that's to register for VAT. Then digital services, it has included the new tax act has included digital services, which includes streaming services, online marketplaces and platforms, online advertising, automated online services, among others. This will particularly be of interest to our women entrepreneurs, especially as regards those that have online partnership with the online selling platform like Jumia and the rest. So we also have zero rate VAT. A lot of goods have been increased, that the scope has been broadened to include more items that are zero rated. This includes basic food items, agricultural equipment, medical and pharmaceutical products, electricity generation, and transmission services, exports, excluding oil and gas exports, tuition fees, educational books and materials, medical equipment, and services, among others. This means that businesses selling these goods and services can recover their VAT costs despite the zero rate, which was previously not allowed by law. So in summary, how does this affect your business? Value-added tax influences your pricing. profit margins, your operational transparency by typically increasing the final price of goods and services for consumers, posing a challenge for businesses. That is, either you increase your price or you absorb the cost. So you have to choose whether to pass it on or to absorb it. And if you are in a very, very competitive environment, you would have to consider that carefully so that you can have a competitive edge, especially when you have a tight margin or significant competition. So what are the effects of VAT on pricing? This includes consumer prices. It influences your pricing strategy. What do we mean by that? For example, now, due to the VAT is still at the same rate, but however, if, for example, you've not been charging VAT before, now you want to be compliant with the law. For you to charge that VAT, it means that it's going to affect your pricing strategy. So you have to be sure, are you passing it on to your customers or are you absorbing it by yourself? So the same thing goes with the effect on the VAT profit margins, because the VAT will actually reduce your cost absorption, impact your cash flow, create financial risks for fast-growing businesses, and increase operational costs for compliance. Effect of VAT on operational transparency. This includes detailed record keeping, audit trail for compliance, administrative burden, and public accountability. Now by acting as a collection agent for the government, you become part of the process, of the transparent process that funds public services. This is also why issues like poor VAT administration can erode public trust. So with the introduction of the new tax act, a lot of things are going to change. And it's important that we get along, that we get in line with that. So we move to another major changes for the new tax act, which has to do with the company income tax adjustment. For the company income tax adjustment, in fact, this one has really helped the small companies a lot, the entrepreneurs a lot, because it has given them a leverage, that is room for expansion while still paying minimum tax. So as you can see from the table below, small companies, the current rate that we have, 25 million. In the new tax, now it's now 50 million. And fixed assets, that is not greater than 250 million. So you can see that this threshold for exemption has substantially increased. Now, medium companies, which is still what we have till December, but from the new Tax Act 2026, there's no more medium companies. Rather, what we have will now be that is small companies and other companies. So for the other companies that is above 50 million, the standard CIT rate of 30% still applies. Those are the adjustments that we have for 2025. Other levies include development levy. They've consolidated this part. Before, people were always complaining, paying various taxes, pay this, pay that. But now they've tried to make it easier by consolidating everything and calling it development levy. So the other levy now is 4% of the assessable profit. And this has consolidated your development levy, tertiary education, information and technology levy, police levy, NASENI, and the rest. That is the major adjustment to the CIT with respect to the Nigerian Tax Act 2025. Now we move over to the personal income tax, number 3, personal income tax, PIT and gig work. This section makes us to understand the key changes that also affect this part. And if you look at the table very well, you will see that the government has created leeway for people compared to the current rate and the new introduced rate, which will take effect from January 1st, 2026. So you can see from this table that the current rate above 3.2 million is 24%. Whereas, if you look at the new tax act, you see that the first 800,000 is exempt at 0%. Then we have the progressive bond rate, where we have the next 2.2 at 15%, the next 9 million at 18%, the next 13 million at 21%, the next 25 million at 23%, and above 50 million at a flat rate of 25%. In addition, the NTA has brought in the tax net to formally include gig workers, freelancers, and other self-employed individuals under the personal income tax regime. Effective January 1st, 2026, all income from trade, business, freelancing, and digital asset gains is now recognized as taxable. So Nigerian residents earning income from foreign clients or platform are now taxable on their worldwide income. In addition, those that earn in foreign currency will remit taxes in the same currency. Now, for personal income, what is the basis for calculation? As self-employed gig workers pay personal income on their net profits, not their gross earnings. This means you can deduct your legitimate business expenses before calculating your tax liability. Now we move to the capital gains tax. Under the new Tax Act, there has been an expansion. The Capital Gains Act, this increases the capital gains tax rates from 10% to 30% for large companies, effectively aligning it with the company income tax rate, and reduces any tax arbitrage that could have been unduly enjoyed in the classification between chargeable gains and trading profit. For individuals, capital gains will be taxed at the applicable income tax rate based on the progressive tax band of the individual. Also, the tax exemption threshold for the sale of shares in Nigerian companies has been increased to 150 million from 100 million in any 12 consecutive months, provided that the gains do not exceed 10 million. This exemption threshold does not apply to chargeable gains on disposal of shares in a foreign company that is not tax resident in Nigeria. In addition, the rollover relief, which is currently being enjoyed, that companies can defer their capital gains tax when proceeds from the business of a business asset reinvested in a replacement asset. This is no longer available under the new act. So you need to understand that other aspects have been introduced, like the increase to cover up for that. So that particular relief, that rollover relief, is no longer available under the new Tax Act. So that aspect covers the capital gains tax expansion, and that is that's what applies with respect to the NTA 2025. Now we go to the significant economic presence levy for non-resident companies with significant economic presence, particularly targeting foreign digital service providers like online advertising and streaming. So this new tax law now has made sure that people that offer services online, that is clients, foreign digital service providers that offer services online, now they have to register and make sure that they remit VAT for people that they partner with, for the customers in the country. That is their audience target, as far as they meet the specific threshold, which is $25,000 for non-resident companies. So we have the withholding and remittance enforcement. It is not just enough to deduct tax at source. In fact, the new Tax Act 2025 is structured in such a way that compliance is key. Compliance is key. This is because if you look at the penalties, the fines, which we'll be discussing as we progress, that will be imposed for not being compliant. It pays to be compliant, because failure to remit triggers stiff penalties with the implementation of the NTA Act. So the next part that we are going to is automation and digital filing. Automation, this is another key change. Normally, most people are used to paperwork. However, the new 2025 Act introduces and mandates the use of electronic fiscal system for all taxable persons. That is, the system introduces software and electronic devices, which is designed to ensure accurate, efficient, transparent tax administration by making sure your transactions are properly recorded and that they are stored electronically for retrieval. So it is advisable that businesses key into this as a result of its benefits. A major component of the EFS is the mandatory e-invoicing and real-time VAT system for all VAT registered businesses. So what do we mean by this? It means that moving from 2026, those paper invoices pending when the FRS would announce a date of implementation. The meaning is that from 2026, it is mandated that all your invoices must be digital, must be electronic. So we advise people now to start looking for softwares, get softwares that are compatible with the electronic fiscal system so that you can be compliant. Another aspect has to do with the incentives and reliefs for small, medium enterprise and women-owned businesses. Just like we said, the new Tax Act 2025 has introduced a lot of incentives and reliefs, and part of them we'll be discussing one by one. One of it has to do with 0% complaints income tax. What do we mean by that? That is small complaints with an annual turnover of up to 50 million and total fixed asset not exceeding 250 million are exempt from CIT on their profits, which is a very substantial increase and is an encouragement for medium enterprises. So exemption from capital gains tax for qualifying small complaints, CGT is not applicable on the disposal of assets. No development levy. You can see part of the advantages. Small businesses are exempt from paying the new 4% development levy on accessible profits, which replaces multiple previous levies that we have in the current act. Another aspect is the economic development incentive. What this aspect has to do is they are now saying, okay, eligible companies in priority sectors like manufacturing, mining, and renewable energy can receive a 5% tax credit annually for 5 years on qualifying capital expenditures. Another benefit is the expanded input VAT recovery. That is, businesses can now fully reclaim their input VAT on services and capital assets, not just on goods for the sale or production, which is a very, very vital shift in the new Tax Act. Now, after looking at the incentives, we also look at the penalties. Penalties and compliance monitoring. Just like we said earlier, the NTA 2025 sets out an extensive schedule of administrative penalties, criminal sanctions, and interest for a wide range of offenses. Some key ones are, so you need to understand that failure to comply can land you in jail. Failure to comply can land you in the court. So in order to avoid all this, we'll go through this together. General offenses and penalties. Failure to register for tax, you have 50,000 for the first month and 25,000 for each subsequent month. A company awarding a contract to an unregistered vendor, that means the person that you want to sell or you want to award a contract to must be VAT registered. You have to take note of that. Failure to do that, you enter into that contract, is a 5 million penalty for you, which I'm sure we will all want to avoid. Failure to file returns or filing inaccurate or incomplete returns, 100,000 for the first month and 50,000 for each subsequent month. So the era of I did not know is no longer there. It's important that we familiarize ourselves with this new Tax Act, we engage consultants, and so that we can ensure that we are compliant. Failure to keep or provide books or records, 10,000 individual, or 50,000 for company in typical cases. The 9 assets for tax automation. This was the aspect that we were saying earlier, that the new tax act has introduced digital automation, and it is being backed by the law. It is being empowered by the law, such that now the FRS is empowered to ensure that your systems as a company is complying with the digital standards set in place. So what do we mean by that? Failure to allow access for tax automation will result in 1 million for the first day and 10,000 each day. So you can know that the emphasis of the importance of automating your services, of digitalizing your services, your invoices, cannot be overemphasized. Failure to grant access for deployment of technology after 30 days of notice is going to be 1 million for the first day and 10,000 per day thereafter. Failure to use fiscalization system, 200,000 plus 100% of the tax due plus interest at prevailing rates. Digital. So from these few penalties that we're able to come up with, failure to deduct tax at source, 40% of the amount not deducted, which is high. Failure to remit tax deducted or self-account, amount not remitted plus 10% per annum administrative penalty and interest at the prevailing CBN MPR rate, up to 3 years imprisonment possible. That is failure to remit when you deduct, let's say, withholding tax or any money that you deduct on behalf of the government, and you fail to remit it. The money does not belong to you. It belongs to the government. You have to make sure it is timely and promptly remitted to avoid penalties and even imprisonment. For virtual service providers, we have 10 million for the first month of default and 1 million each subsequent month. Possible license suspension, that is for our brokerages. Failure to notify change of address of business cessation. It's 100,000 first month, 5,000 each subsequent month. Fraud, misdeclaration, obstructing tax operation, impersonation of a tax officer, fines up to 1 million and or imprisonment up to 3 years, depending on the offense. The law, that's also another aspect that you would want to take note of, which is very, very pertinent. The law also holds directors, trustees, or partners personally liable for non-compliance by their organizations, unless they can prove the violation occurred without their knowledge or consent. In essence, this is telling you that the era of they cannot, the FRS is coming to come and do investigation or something, and they cannot locate the complaint or things like that. Now, you as a complaint secretary, you as the director, principal officer of the company can be personally held liable for non-compliance. So in summary, this is telling us that the essence of compliance, the importance of compliance cannot be overemphasized. Now, how do they monitor compliance? Due to the electronically fiscal system, the window that has been introduced, it makes it very, very easy to generate data, transparency, enabling the Nigeria Revenue Service to monitor real-time or near-time business activities. Because your invoices, when you make sales, when you make purchases, all those things, the FRS can see it. In this new Tax Administration Act, the digital aspect of it, everything is going to be transparent. So it's going to help them to enforce compliance. They can see what is going on. In addition, the tax authorities are also empowered by this new law to request information, conduct investigations, demand documents, access systems, and impose penalty or bring criminal proceedings. Implications and key tips for businesses and individuals. Like we said, early compliance is critical. The value of compliance cannot be overstated. Digital readiness. Businesses must anticipate and prepare for the EFS, the electronic fiscal system, and the requirements, because you know, your personal systems in the office, your systems in the office must conform, must be able to compart with the EFSM system. So it's also important to make sure that when you are deploying softwares, you make sure it's compatible with the EFS system. Failure to deploy leads to major penalties, as stated earlier. Record keeping. The law increases record keeping obligations. All taxable persons must maintain accurate records in English or with translation for a minimum period. 6 years is cited in commentary. So it's important that we review our internal record systems. Personal liability risk, as earlier stated. Now the company directors, the trustees, may be held personally liable for non-compliance. This elevates governance risk. Remedy and refund mechanisms. For refunds, the law set timelines and penalties for incorrect claims. Ensure careful claims and documentation. What is this saying? That you cannot just wake up one morning and say, oh, government, you are owing me so, 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 you are owing me so, so, so. What they are trying to say there is you have to make sure that you are also claiming an accurate figure from the government, which is also very, otherwise there's a penalty also for that. So like we said earlier, the essence of this new tax act is compliance. Compliance is key. Compliance is key. And I hope with this brief section, we've been able to briefly look at the key introduction, which we started with value-added tax, went to complaint income tax adjustments and the changes there, where we spoke about the 50 million. We went to the personal income tax, where we spoke about the band rates and the increase there. Also, the inclusion of gig workers and freelancers under the new tax act. We also spoke about the capital gains tax expansion, that is the increase in the threshold. Then we spoke about the significant economic presence, the withholding tax remittance enforcement, the automation and digital filing. And we spoke about the incentives and relief for SMEs and women-owned businesses, penalties and compliance monitoring. And it is our belief that after this session, we'll improve with our compliance. Thank you very much.
Thank you very much, sir. That was a very, very exciting session. I'm sure everybody found that very insightful and refreshing. It's great to really begin to have an understanding of what the tax climate is going to look like in 2026. And Mr. Akinlabi, I can say you did immense justice to that. Thank you very, very much. Once again, if you're watching, please remember you can ask your questions by dropping them on the chat function in the YouTube channel. So please ask your questions. After this next session, we'll be having a short session where we have questions and answers I'll be taking. So thank you, Mr. Akinlabi. I think we are good to go to the next session, which we'll be handling. Are you ready to go forward to the next session? And then after that, we'll have the question and answer session. Are you fine with that, Mr. Akinlabi?
Okay, just 2 minutes.
Okay. So in the meantime, while that's taking, while Mr. Akinlabi is getting set for that, the next session, I think he just addressed the 10 tax changes in 2026 that could make or break your business. And then the next session is the $1 million mistakes that enterprise owners could make with tax and how to avoid these errors. Once we're through that session, we'll jump into the session titled Hot Seat Tax Doctors Solve Your First Questions. So it's going to be a question and answer session where our tax experts and consultants will address whatever questions that you have. So let's just wait for Mr. Akinlabi to be ready. In the meantime, please put up your questions. I've actually received a few questions already by email. And I'd like to ask everybody watching, invite your friends. The tax question is a major issue in Nigeria right now. Everybody needs to know what's going on. So many people are confused. I remember Kelechi saying how she went to school to drop her kid in school, and many parents began to ask the questions. Let me know what's going on about the taxation. It's great if you learn what's happening about taxation very early so that it doesn't become a challenge when you step into 2026. So invite your friends, family members, loved ones, colleagues in the office, business partners, relatives inside the country, even relatives outside the country, because there are certain companies I hear that can actually affect somebody, even if the person is outside the country but is maintaining financial operations inside Nigeria. So invite your friends, share the link for this event, let people know what's going on, and then we're here to make sure that you learn all you need to know about the new tax landscape. Okay, I can see that you're ready. So I'm going to hand back over to Mr. Akinlabi to take us through this very exciting session, million naira mistakes that women entrepreneurs and of course male entrepreneurs too make when it comes to tax, and exactly how to avoid these mistakes. Over to you, Mr. Akinlabi. Thank you very much.
Okay, thank you very much. Once again, I welcome everyone to this section. Once again, I welcome everyone to this section that has to do with 1 million mistakes women entrepreneurs make with tax and how to avoid them. Thank you for joining as we explore various ways these mistakes occur and how we avoid them. Okay, so one of the first mistakes that people do is ignoring tax. Hold on, please. Okay. Yes, one of the mistakes people do is ignoring tax registration. I'm sure there might be some of our participants that have not even registered their businesses with the Corporate Affairs Commission or the Federal Inland Revenue Services. It is very, very important. Those are some of the mistakes that we make out there. Many small business owners, especially those operating informally, do not register with Corporate Affairs Commission or the Federal Inland Revenue Service. Some mistakenly believe registering with CAC is enough, but a separate tax team is required for tax compliance. What do we mean by that? Even when you have registered with CAC, you will still have to activate the thing on the CAT certificate with the FRS in order to ensure tax compliance. What are the costs? Unregistered businesses cannot properly file taxes, potentially accumulating penalties and back taxes that runs into millions of naira. Penalties for late filing of returns alone can be substantial. Now, what do we mean by this? A small business, for example, a business that just commenced operation. Now, you commenced operation. The normal thing for you to do is to register with FRS, make sure you are registered. Then you begin to make sure that beginning from each month, all your obligations, filing of returns, new returns, even when your turnover is low, filing of new returns is also key. All those things are important. By the time you don't do those things, the meaning is that any day, probably you want to get something from the government, or you want to travel, or you need something that has to do with your tax clearance certificate, and then they now tell you to go and bring this. Then, by the time they begin to assess all the backlogs, you will discover that the liability will be huge. And if care is not taken, that business might run under. So in order to avoid that, you have to register your business with CAC and obtain your TIN. Familiarize yourself with the tax law that apply to your business structure. Is it a sole proprietorship or a limited liability company? Another mistake women entrepreneurs make is mixing personal and business finances. You have to make sure that you separate the line between your personal finances and your business finances. The reason is that, for example, your personal expenses are not wholly related to your business, and as such, will be disallowed for tax purposes. Using a single bank account, part of the mistake for both business and personal transactions, make it difficult to separate expenses. complicating tax calculations, and audit defenses. The cost, this can lead to miscalculation, missed deductions, and unnecessary scrutiny during a tax audit. FRS may disallow expenses that are not properly documented or appear to be personal. This is not related to the business. How to avoid such? You open a dedicated business account solely for your business and use it exclusively for business-related income and expenses. Another important aspect is use accounting software. Hire a bookkeeper to maintain clear financial records. This cannot be overemphasized. Another mistake that people make, building on the last statement, is poor record keeping. If you don't automate your record, the chances of mistake is very, very high. Many entrepreneurs neglect to maintain proper records of income, expenses, invoices, and receipts. Without documented proof, they cannot substantiate claim for deductions. What do we mean? During FRS audits, when they come to check your tax compliance, they want to know, okay, where are your expenses, your third-party evidences? If you don't have third-party evidences, there is no proof, there is no evidence to show that this particular expense was incurred for this particular purpose. Hence, the reason for proper record keeping. So part of the mistake that women entrepreneurs make is poor record keeping. Another part is ignoring value-added tax obligations. The mistake. Businesses with an annual turnover exceeding 100 million are required to register for, collect, and remit VAT. Many fail to do so, while some incorrectly charge VAT on exempt goods or services. The cost. FRS penalties for late filing or non-remittance of VAT can be steep and accumulate quickly. Ignoring this tax obligation can lead to serious compliance issues. How to avoid? Know your annual turnover and register for VAT once you cross the 100 million threshold. Even as we are expecting that our participants moving forward, we experience growth. So it is also our belief that during this period, as you're experiencing growth, or you are envisaging that, oh, this year I'm going to cross the 100 million threshold, you begin to plan for it. You begin to, work towards, oh, what are my obligations? What are the things that I must do to make sure that I am compliant? So it's very, very important once you envisage that you will cross the 100 million threshold, or once you envisage that you are going to be obliged by the VAT rules, it is important that you stay informed about which goods and services are subject to VAT. It is also important that you file and remit VAT returns by the 21st of every month. That is, for example, for this month of October, it is mandatory that your VAT must be filed on or before the 21st of November. That is an example, just to illustrate that. Another mistake women make is overlooking deductions and incentives. When you overlook deductions and incentives, it means you are going to be paying tax on the high side. Because some of the things that you should have claimed as allowable deductions, you will be unable to claim it because you are not even aware of them. So the mistake is many small businesses, especially those owned by women, are unaware of the tax reliefs, deductions, and incentives available to them. The cost. Missing out on legitimate deductions for business expenses or exemptions can lead to overpaying taxes. For example, eligible small companies with annual turnover of 50 million are exempt from company income tax, but may still pay if they are unaware of this incentive. How to avoid? Research applicable tax incentives, such as those for small companies, startup, or specific sectors like agriculture. Claim all eligible business expenses, including rent, utilities, marketing, and staff salary. Another mistake is failing to pay taxes on time. Missing deadlines for annual returns, monthly VAT, or other tax obligation is a common and costly error. The cost, late payments attract significant penalty and interest charges, which can significantly eat into your profits. FRS can become more vigilant with frequent late filing. So in order to avoid this, you have to make sure that you keep a strict tax calendar with all relevant deadlines. Again, the use of accounting software to track tax-related transactions and set up reminders. Another mistake is mismanaging employee tax deductions. For businesses with employees, failing to properly deduct pay-as-you-earn taxes and remit them to the tax authority is a common mistake. You must realize that when you deduct money from your staff, the money is not meant for you, the money is for government. So as such, you must ensure that you pay such as at when due, as also filing late will result in penalty. This can result in fines and penalty, and the business will be held liable for the unremitted taxes. Like we said, it is not your money. Accurately calculate and remit payee for all employees monthly. Consider using payroll software to automate the process. Another mistake is people don't understand the threshold. So small major enterprise with an annual turnover of 50 million or more must comply with VAT regulations. The new Nigeria Tax Code of 2025 expand VAT obligations to social commerce and e-commerce, specifically covering foreign digital service providers. All employers must remit payee deductions monthly, and the failure to meet these obligations can result in penalties and other enforcement action. In addition, the Federal Inland Revenue Service also has the power to freeze bank accounts of defaulting tax holders. So we move to the VAT compliance on social media. The threshold, just like we said, the threshold for small businesses with an annual turnover of 50 million or more are required to register for VAT. This is 50 million, please. Charge 7.5% on taxable goods and services and remit tax to the tax authority, the collected tax to the tax authority. Like we said, it is not your money, it belongs to the government. So you have to make sure you remit it as at when due. VAT must be remitted monthly on or before the 21st day of the month following the transaction. Penalties for non-compliance, failure to register, file or remit VAT carries significant penalties. For late filing, penalties start at 50,000 for the first month and 25,000 for each subsequent month. Under the NTA 2025, automatic surcharges also apply to late payments. Exemptions. SME below the 50 million threshold are exempt from VAT registration and remittance. Some essential items like basic food, medical products, and educational materials are also exempt or zero rated. We have the VAT on social commerce and that's on digital platforms. The NTA 2025 requires foreign digital service provider to register for VAT, collect it from Nigerian customers, and remit to the tax authorities. How does this affect your Nigerian businesses? Local businesses, including those in fashion, consulting, food, and beauty that transact via social media or e-commerce platform and meet the 50 million turnover threshold are required to charge and remit VAT. The NTA 2025 also introduces a reverse charge mechanism for services procured from foreign providers, placing the responsibility for VAT remittance on the Nigerian business. Mandatory deduction. Now we move to payee remittance obligations. So what we are trying to do here is we have looked at some of the mistakes that women make. Now we are now moving into things that you should know. We've spoken about the VAT aspects and the penalties that will be involved there. Now we are moving to the payee remittance obligations. For this one, all employers are mandated to deduct personal income tax from their employee salaries under the payee system, the pay-as-you-earn. Remittance schedule. Employers must remit these payee deductions to the relevant state tax authorities by the 10th day of the month following the payment of salary. Meaning that, for example, in this month of October, by 10th of November, you must make sure you have made your payee remittances to the government. What is the penalty for non-compliance? The penalty for failure to remit payee is 10% of the tax due plus interest. Now we move to penalties and bank account freezes. Late filing. These are also some of the things when we are talking about compliance and the rest, part of the mistakes which we have discussed earlier. Now we are now talking about, we've spoken about the VAT, we've spoken about the payee. Now we are talking about the penalty, other things that can come up by not being compliant. Late filing. The NTA 25 has increased penalties for failure to file returns. The penalty for company income tax is 100,000 for the first month and 50,000 for each subsequent month, which is very, very substantial. Late payment, automatic surcharges, which are compounding interest charges, are now automatically triggered for late payment. The meaning of this is you have to be compliant. The key word is compliance. Bank account freezes. The FIRS has the power to place restriction on taxpayers' bank accounts if they have outstanding tax liabilities. However, the Joint Tax Board has clarified that bank accounts will not be frozen solely for lacking a tax identification number. Now we go to sector-specific tax consideration, which are things that you must also know so that you can make good use of the benefits that it avails. We have a fashion and beauty. Businesses in this sector must track their annual turnover for VAT compliance. Those with employees must also adhere to payee obligations, as many that operate online. They must also understand the new VAT rules for digital transaction. Consulting as a service-based industry, consulting business needs to comply with VAT if they meet the threshold, as well as payee for employees. They are subject to the new reverse charge VAT rules for any services they procure from foreign providers. So you need to understand this when you are dealing with foreign clients. Food businesses, especially those in agro-processing, may be eligible for tax incentives, including a 5-year income tax exemption for new companies involved in agricultural activities. However, they must still comply with VAT and payee, depending on their turnover and number of employees. Basic food items are generally exempt. It is important that we understand all this. And with this, we come to the end of the 1 million mistakes that our women make. I believe that there will be questions with respect to this section, and we'll be available to answer your questions. Thank you very much.
Thank you very much, Mr. Akinlabi. Thank you. That was very, very insightful. I can please viewers on our YouTube channel, you can drop in your comments. You can give an applause to Kelechi and Akinlabi for the great session so far, and we are jumping immediately into the first question and answer session, which we title Hot Seats. Tax Doctors Solve Your First Questions. Live Q&A on the sessions. Now, you're very correct, Mr. Akinlabi. You and Kelechi are going to have some very interesting questions to answer. So already some questions have come in. So please, all our viewers, please feel free to drop your questions. We have another session after this where we'll answer some questions. But let me just quickly pose the few questions we have already to the duo of Madam Kelechi and Mr. Akinlabi right now. The first question that came in is, this came from Vero Ijoma. Her question is, will investments in mutual funds, treasury bills, saving bonds, etc., be taxed? Will investments in mutual funds, treasury bills, saving bonds, etc., will they be taxed? Over to you.
Sorry, you said with investments in mutual bonds?
In mutual bonds, treasury bills, that obviously government T-bills, treasury bills, savings bonds, etc., will they be taxed? will they be taxed? Yes, the second question is for salaried workers whose taxes are already being deducted by their employers, how will I come from side hustles to be compliant? Okay, so a salary earner who has a side hustle, so maybe she works in a bank or something, but has a bakery or something, does snacks. How would she become compliant as regards her side hustle? So maybe lady works in a bank, she owns a confectionery business, she does cakes and stuff like that, snacks. How will she ensure that she is compliant, even though she's already compliant for her basic salary from the bank she works with? And then will this be monthly or annually for her side business?
Will this be monthly or annually?
Yes. We have another question coming. The person is asking, she says, Cora, she says, I'm just joining, please. How will this affect me if I am working for an international company? How will this affect me if I am working for an international company? So I'm guessing the person is working remotely, maybe works a company, let's say, for instance, let's say in the US, and is being paid in, maybe let's just say $2,000 is being paid into a bank, in Access Bank. How would this affect this person if she is working remotely? I think we can address, we have a few other questions, but I'd like to reserve those for the second session. But please, all our viewers, feel free to drop your questions. That's why we are here today. We want to answer the questions that you have. What are your concerns as regards the new tax bill? As I said earlier, invite your friends, share the link of this meeting. How do they say? Share the link. Share the link. Share the link. Invite your friends to come join. Family and friends that you know might have an interest. Okay, Vera is confirming that she meant income. Okay, that question for salaried workers whose taxes are already being deducted by their employers, how will the income from, same thing. So how will the income from her side hustle become compliant? So she's working somewhere, she has a side hustle, maybe a bakery. How would that become compliant? Would that be done monthly or annually?
Yeah. I'll take this one.
Okay.
So I'll say compliance is, under Nigerian law, even under the new laws, we have obligation to self-disclose and self-comply. So her question of how it will become compliant is really dependent on her, but she has an obligation to disclose and to comply. So it will be her nearest tax office. She will disclose her income on the side, and then she would comply. It's as simple as that, to be fair.
Okay, thanks, Madam Kelechi. That's a fantastic answer. Now, she was asking about how would that be rated? I mean, would that be evaluated on an annual basis or on a monthly basis? The income from her side hustle. Yes.
Okay, so the income from her side hustle will be likened to a self-assessment where she's being assessed for the income that she generates on her own. So yes, it would be annual. Akin, you can feel free to add any other comments that you have to this. Thank you.
Akin, it's like you're muted. Let me see if I can unmute you. You need to unmute, Akin. You're unmuted.
Can
Okay.
you hear me now?
Yes, we can hear you loud and clear. Please go ahead.
Okay. So, with respect to the question on investment in treasury bills and saving bonds, you know, the new tax act 2025 has already given all this.
Mr. Akin, you may need to speak up a bit. It's not very audible, please.
Okay.
Thank you.
Hold on, please.
Okay.
Can you hear me now?
Yes, way better.
Okay, thank you. So for treasury bills and the federal government saving bonds, the interest earned on this investment is explicitly exempt from income tax. So the NTA is still keeping the long-standing tax exemption for this federal government backed security. So I hope that one will take care of the question on the treasury bills and the savings bonds and the mutual and bonds too. So with respect to the other question, if I am working for the which my managing partner has answered, if I'm working for an international company working remotely, how will this be addressed? If I got that question right, you sure?
Yes.
So for that particular, okay, for that particular person that is working remotely, first and foremost, for example, in Lagos State, there is what we call a self-assessment. So the person will be expected to self-assess and remit such to the state government. The same thing depending on the state, wherever you find yourself operating. If you are working remotely and you've already met the threshold where you must be compliant, then it is important that you self-assess and remit to the necessary questions that has been raised. Thank you.
Okay. Thanks, Akinlabi. Something just came to my mind. Something just came to my mind. Okay, we have another question, but something just came to my mind. Now, for the earlier question that where the lady says she is currently, let's say she's working in a bank. She works for a bank, and then she has a side hustle where she does work, where she bakes cakes for people. So she bakes cakes and snacks and stuff like that. It's a side hustle. Now, something just came to my mind. I know when we're talking, you talked about the issue concerning the threshold, less than 20 million naira, above 20 million naira. So could you explore two things? Let's imagine this lady's name is Angela, just for fun purposes. Her name is Angela, and she works at the bank, but she also makes cake. Now, Angela has registered that business as maybe a business name. And her business name, she does, let's say, I'd like you to explore, okay, what if Angela's, at what point in time would Angela need to actually pay taxes? You know, because I heard you say you are actually, at a particular threshold, you are not required unless you opt in yourself. So could you explore, because I know that those are the questions in their minds. Is it wiser for a lady to say, okay, let me just be doing this as a personal thing? I don't want to set up a business and have an account. Or what if Angela had a business, had an account? Or what if Angela had no business name? She was just, collecting cash from people. How would this look when taxes came up? And could you explore those options, Mr. Akinlabi? I mean, I know you can breathe heavily on that and give that more life.
Thank you very much. With respect to the question for Angela inputs, first and foremost, the bank deductions, those ones we properly include. Now, in respect of the side also, probably she has registered the business. Now, she will need to understand that there's a threshold for small companies. Threshold for small companies is, for example, somebody selling something you need to
Mr. Akinlabi, I'm so sorry to jump in. It's not, I don't know why the audio is low, please, from your end. I don't know. I'm sorry, you may need to speak. Yes, because they are complaining that they can't hear you very clearly. If you could please speak, maybe you shout a bit.
Okay, can you hear me now?
Yes, we can. Yeah.
Okay, thank you. So, like I said, with respect to the that's Angela, the salary worker, the bank would have remitted the deductions that they made from your salary for that month. Now, with respect to the side also, now, the law says 50 million for small companies as the threshold. So somebody selling cake or things like that, you have to make sure that even from the smallest record, from the smallest sales, you keep records of those things, because you never can tell. You might be anticipating maybe 1 million, and you might just hit the jackpot and you have a lot of customers and things like that. So your business can skyrocket, it can grow, it can boom. So in order to preempt compliance issue, it's better you keep records of transactions of your income. And then when it comes to the aspect of tax compliance, when you want to start remitting properly, you have to make sure that those thresholds, first and foremost, they are important. Like I said, in this particular case, is 50 million. For this year is 25 million, but from 2026, the new tax act, which is what we are focusing on, is going to be 50 million for small company. So the moment you are envisaging that you are nearing that threshold, or you are going to cross that threshold, then you have to start preparing your tax books to make sure that you are compliant. So I hope that answers, and with respect to will this be monthly or annually, just like I said, it's as soon as you are noticing that you are getting to that threshold. The moment you enter that threshold, is monthly. So, but if you are not yet with that threshold, then you are exempted. So I hope that answers the question. Thank you very much.
Yes, it does, Mr. Akinlabi. Thank you very much. We have a pile of new questions that are coming, but what we're going to do is we're going to jump into the next session. The next session, which is titled "How to Legally Cut Your Taxes in Half in 2026." How to legally cut your taxes in half in 2026. And then that will be followed by another tax question and answer session. So we're going to be jumping back into that session, which of course is being anchored by you again, Mr. Akinlabi. Thank you very much for the fantastic work you've been doing today, and to my dearest Madam Kelechi, who's always been there when I called on her. So we're going to jump into your session, the next session, Mr. Akinlabi, and then we'll have an all-encompassing. We'll use the remaining time to just run through all the questions that we have. So please keep your questions coming. We have some very, very interesting looking questions that have popped up now. I see one or two people that I know very well. You are dropping questions, everybody's dropping questions. Fantastic. So let's go back to your session. Thank you very much, Mr. Akinlabi. Over to you.
Okay, Justin.
While you're setting up, we will be, as we're just, while Mr. Akinlabi is setting up, we will be having another session sometime in December, hopefully also in collaboration with WTS Blackwood Stone. And the goal will be to help people that understand, that will just be a few days before the tax law takes full effect. So hopefully, in collaboration with WTS Blackwood Stone, we should be able to have another session at the end of the year, to just let's call it an emergency shotgun session where we guide people on what they need to get done before the tax bill takes full effect. It's a very, very pertinent question. And we'll be sending out invites to allow people to register on time and engage in those conversations. Mr. Akinlabi, are you ready to share your screen? Okay. I think while you're getting ready, I think one of the questions that somebody asked me personally was if he is maybe legally resident in the UK outside Nigeria, but owns maybe property businesses in Nigeria where the revenue and income is coming. He maybe has some property and he gets revenue and they're paying in Naira. Would he be liable for taxation issues locally, internationally? I guess we'll treat that in the next session when we jump in the next question and answer session when we jump in. Okay, so I guess you're sharing now. Over to you, Mr. Akinlabi. I can see your screen, Mr. Akinlabi. Okay, I can see the screen. Just to click slideshow.
Good afternoon, everyone, and good morning. I see the sessions are so fast. I hope we are able to comprehend them properly, and feel free to send in your questions even as we commence this session. Once again, good morning, everyone, and welcome to the third section of the TaxNaija bootcamp, where we will be looking at how to legally cut your taxes in half in 2026. How to legally cut your taxes in half in 2026. Now, understanding tax reliefs and incentives for SME. You need to understand that tax reliefs are there to assist the taxpayers to reduce their taxes and to also encourage them to pay tax. So while the implementation of the Nigerian Tax Act 2025 is yet to commence, it is pertinent to have a good understanding of the reliefs and incentives available for SMEs to benefit from it. Tax reliefs and incentives for individuals. You can legally reduce your taxes by maximizing the personal income tax relief. Available options include increased annual income exemption. That is, if your yearly income is less than or equals to 800,000, you are completely exempt from paying personal income tax. The new investment-based deductions. This includes a contribution to your retired savings account. That's your pension. Your pensions are allowable deductions. You have your premium payments, your life insurance and policies. You have your contribution to the National Health Insurance Scheme. You have your contributions to the National Housing Fund. So, by the time you make all these payments, if you are actually in that bracket, it is important that you claim relief for all this when you are computing your taxes so that you don't pay high taxes to the government. You are paying exactly what you are supposed to pay. So another aspect is claiming rent relief. The new law allows you to claim part of your rent relief. Another aspect is the federal government bonds, which was part of the questions that was earlier asked. So understanding tax relief and incentive for SMEs. Now we've spoken about individuals, we want to talk about complaints. Tax reliefs and incentive complaints increase turnover threshold. If your complaints annual turnover is 50 million below and its total fixed assets do not exceed 250 million, it is now exempt from complaint income tax. Previously, the turnover threshold was 25 million. That is what is still applicable till December. So we can see that this is good relief. Agriculture exemptions. Businesses involved in agriculture, such as crop and livestock production, they enjoy a 5-year tax holiday from their start date. Export profits, these are some of the reliefs that you should know so that you can utilize them very well. Export profits are exempt. Beginning January 1, 2026, profit from exported goods are tax exempt, provided the proceeds are brought back into Nigeria through official channels. Then this new tax laws also helps you to recover input VAT. For the first time, businesses can now claim input VAT on all purchases, including services and fixed assets, provided they are directly related to their taxable supplies. Then you leverage VAT exemptions, numerous essential goods, that's in terms of items that have now been exempted from VAT. We have basic food, educational materials, and medical services, among others, are now zero rated for VAT. Also, we have exemption for renewable products. Clean and renewable energy products are specifically exempt from this new surcharge. So these are some of the things that is good that you know as small, medium enterprises so that you can make maximum use of it when computing your taxes. 5% tax credit. Companies operating in priority sectors, which include renewable energy, can receive 5% tax credit for qualifying capital expenditures over 5 years. Now we go to the other aspects. How to legally cut your taxes in half in 2026. So as you can see, the first part, we spoke about understanding tax reliefs and incentives for SMEs. Now for this other aspect, we'll be talking about the power of record keeping, which you can see in CETA section 55. The power of record keeping under the Nigerian Tax Administration Act 2025 has become more crucial than ever before. For both individuals and businesses, meticulous record keeping is no longer a best practice, but a legal mandate to navigate the new tax landscape successfully and avoid severe penalties. Good record keeping will ensure the following. 1. Claim allowable expenses. These expenses that are only incurred by the businesses, like stationaries and supplies, rent, staff salaries, amongst others. It will reduce tax audit risk. A comprehensive and organized system provides a strong audit trail that can reduce the likelihood of a lengthy and costly tax audit. The burden of proof to challenge a best of judgment assessment falls entirely on the taxpayer, meaning that you have to make sure you have documentary evidence. Otherwise, the FRS, whatever they impose on you as the best of judgment, you will have to pay. You have to prove that it's not correct. And to prove that it's not correct, you have to have your supporting evidence, your third-party documents. Faster claim and refunds. That is for the VAT input. When you have proper documentation, it will be easier for you to be able to carry forward overpaid taxes to future liability. Having clear records can expedite this process. It will also be easier for you to claim whatever tax refunds that you want to claim. And another power of record keeping is strategic tax planning. Accurate financial records allow for more effective and transparent tax planning. Businesses can strategically utilize available incentive reliefs without fearing non-compliance. So that's for that aspect. In respect of looking at the practical aspect of it, of the record keeping, is like a company that a small company, for example, that is under audit by the FRS and has no record. The company has no record. If, for example, the company is expected to pay a liability of 500,000, in the real sense, the liability for the company is 250,000. However, the FRS came up with 500,000. How do you defend that when you don't have record? So the essence of record keeping cannot be overemphasized. Another aspect that we are going to look with respect to how to legally cut your taxes in half in 2026, is claiming allowable deductions and expenses. We examine some of the allowable deductions and expenses as stated below. Employee costs, that's your salaries, your wages, and other employee benefits. These are allowable deductions and expenses. Rent, that is your rent and premiums paid for business premises. Your repairs and maintenance, that is the cost for repairing, that's your plant, machinery, motor vehicle, as far as they are not capital in nature. Then we have capital allowances, which is illegitimate deduction rather than depreciation. The tax purposes allows you to claim capital allowances to reduce your tax liabilities. Another aspect is interest on loans. Interest paid on loan, money borrowed for business operation, they are claimable expenses. Bad debt, debt proven to be irrecoverable in the course of business. As far as this can also be proven, is very important. And that is the essence of the digital process, because unlike now where it's difficult to prove bad debt, with that one, it will be clear. Everybody can see it whether money has come in or not. Professional fees, that's payment for legal, accounting, and other professional services related to the business. Advertising and marketing. Expenses for promoting the businesses is also allowable. Utilities, that is your electricity, water, internet, used for the businesses. Then we have travel and transport, which are business related, not the director's personal travel or the director's children's personal travel or the director's relations personal travel. Those will not be allowed. Business related travel expenses, including accommodation and travel costs, medical expenses. Training and development costs, costs for employee training programs, donations to approved, it's important to know that, for approved government bodies up to a maximum of 10% of the company's total profits. Then we have pension contributions, which we have said earlier is also allowable. We have research and development costs, that is cost incurred on research and development for commercialization purposes. So that brings us to the aspect of some examples of the expenses and the deductions that are claimable, that can assist us in legally reducing our tax liability. Now, we also move to another aspect for tax efficiency. That is business name, sole proprietorship or partnership. We want to look at that part. Okay, which one is much more efficient for you? This is a very, very technical part, which you have to take your time. You have to have all the statistics to make sure that you actually consider which one will actually be effective for you, whether it's a sole proprietorship or moving over to a limited liability company. So for sole proprietorship, which is business name, the registration is simple, it's cost effective, but there is no legal distinction between you and the business, which means you can be held personally liable for the business activities. So taxation, income is taxed under the Personal Income Tax Act. Your share of the business profits is added to your personal income and subject to your state's tax regime using the progressive boundaries. This is shown in the table below. That is for business name. Then efficiency, favorable for micro businesses and freelancers, especially those with an annual income of 800,000 naira or less, which are fully exempt from personal income tax. Another aspect, this has to do with the limited liability company. And we say a limited liability company pays company income tax, but can access more deductions and credits. Registration can be more complex than a business name, but it creates a separate legal entity providing liability protection. Taxation is subject to company income tax levied by the Nigerian Revenue Service. For small companies fully exempt from CIT, capital gains tax, and the new development levy. The new tax act defines a small company, as earlier said, as having an annual turnover of 50 million or less and fixed asset not exceeding 250 million. All other companies are taxed at the standard rate of 30% CIT rate. The former medium-sized category is eliminated. Efficiency is ideal for scaling startups seeking investment. The tax exemption for small companies provides a significant incentive for new and small businesses to incorporate. Transitioning from a sole proprietorship to a registered company may therefore offer strategic advantages, especially for growth-oriented entrepreneurs. Now we want to talk about the sector-specific incentives and grants. The 2026 framework includes special consideration for businesses in agriculture and agro-processing, renewable energy and green technology, and women-owned startup under the National Inclusion and Empowerment Program. We'll look at the first one there, agriculture and agro-processing. The framework for 2026 includes significant tax relief and investment for the agriculture sector. Tax exemption, companies involved in agriculture, including crop production, livestock, aquaculture, and food processing, will be exempt from income tax for their first 5 years of operation. Then we have the special agro-industrial processing zone, which the government has announced substantial investment in to establish across the country to transform food systems and strengthen agricultural productivity. And we have the enhanced investment incentives. Nigeria is actively seeking private sector investment in agribusiness through regulatory reforms, public-private partnership, and agri-tech innovations. Now we go to the renewable energy and green technology. The government is promoting renewable energy investments to address electricity supply challenges and achieve national energy goals. Tax incentives. Sectors like renewable energy and technology receive specific tax breaks to encourage growth. Energy Master Plan targets. The Renewable Energy Master Plan aims to increase renewable electricity generation and support higher electrification rates through fiscal and market incentives, including a moratorium on import duties for renewable energy technologies. Policy promotion, favorable tax policies, streamlined regulatory processes, and financial incentives are used to promote investment in renewable energy. Then another aspect, specific incentives and grants, we have the women-owned startups. Several programs and awards are in place to address the funding gap faced by women entrepreneurs and promote economic inclusion. One of them is the Rev Up Women Initiative. This program supports early-stage woman-led businesses with the 2026 cohort, focusing on entrepreneurs in e-commerce and agribusiness. It offers acceleration programs, mentorship, and funding. Then we have the Aura Tech Award 2026 for tech-focused women-led startups. This award provides prize money and access to investors. Other grants, non-governmental and corporate organizations like the Tony Elumelu Foundation, the TaxNaija Foundation, also offer grants and programs for women entrepreneurs. Land ownership incentives. Under the State Action on Business Enabling Reforms, the SABA programs, incentives are provided to increase the share of female-owned or co-owned land titles. Move to another section. Avoiding audit triggers. Avoiding audit triggers. Now, you need to understand that when you have your businesses, even when you are not, that is when you have met that threshold, and then you have now started remitting monthly, there are things that you must do to avoid audit triggers. Many businesses lose money because of surprise audits resulting from red flags. These red flags includes inconsistent declaration between VAT and CIT filings. Discrepancies between tax filings are a major red flag for tax authorities like the Federal Inland Revenue Service. What triggers an audit? Auditors will compare the revenue reported on the company's value-added tax returns With the turnover declared on his company income tax filing, which is on Tax Pro Max, significant or frequent mismatches suggest revenue is being underreported, leading to a closer examination of a business financial statement. How do you prevent it? Regularly reconcile your VAT returns with your sales ledger and your CIT returns to ensure that you have captured all figures, that all figures are consistent and accurate. Another easy way to make sure that you minimize error is the deployment of robust accounting software, because this will help you to automate the process. There will be less issues, when recording transaction. Move to another point there. That's another key audit trigger, frequent late payments or amended returns. Late payment or frequent amendment to tax returns can signal financial mismanagement or a deliberate attempt to mislead tax authorities. What triggers the audit? You filed the tax returns or you remitted taxes late. It can attract penalties, signal a lack of internal control. Then when you repeat this month you filed late, you paid late, the following month you filed late, you paid late, the tax authority will look, oh, maybe there is something that they're hiding there. And then before you know, they want to come and review your book. So this will invite a more thorough review. How to prevent it? Ensure strict internal controls and deadlines for all tax filings. Use technology to automate processes and set reminders for tax obligations. If you find an error, address it proactively. And if it becomes a pattern, you make sure you investigate the root cause to fix it, as delay could be costly. Another audit trigger is sudden unexplained increases in revenue. While rapid growth is a sign of success, it can also attract scrutiny if it is not properly documented, which is another reason why we said the keyword compliance documentation. In fact, another keyword is documentation. As you are compliant, you have to make sure that you have your documents, your evidences properly documented. What triggers are not? The tax authorities may flag a company that experiences a sudden and substantial increase in revenue without a clear explanation or corresponding business expansion. This could suggest unreported or fraudulent activities. To prevent this, you have to maintain detailed records to justify any significant changes in revenue, such as new contracts, market expansion, or product launches. Auditors will look for supporting documentation, such as contracts, invoices, and sales agreements to corroborate the reported growth. So that's part explains the sudden increases, which can lead to an audit trigger. Now, what are the best practices to avoid audits? Best practices to avoid it. Now, while we are not running away from audits, if we are able to do all this, even when the audits come, we are confident. One is accurate and organized records. Keep thorough and well-organized records of all income, expenses, and other financial transactions. Internal tax reviews. Periodically conduct internal tax reviews to identify and address any potential red flags before an external audit. Professional advice, very key. Engage a competent tax consultant to help prepare and defend your tax filings. And above all, stay updated, monitor updates from the FRS and other relevant bodies to stay current with the tax laws and regulations. This is very, very key. Now, another part to legally cut our taxes in half is leveraging digital tools. That is the Tax Pro Max and automation. The Federal Inland Revenue Service encourages all filing through the Tax Pro Max platform. In addition, it is expected that mandatory e-invoicing will be rolled out by January 2026 for implementation. This technology helps streamline workflows, reduce errors, and improve efficiency for both taxpayers and the tax authorities. It is important that you familiarize yourself with these technologies to ensure maximizing its benefits. Once again, We come to the section of how to legally, to the end of the section of how to legally cut your taxes in half in the 2026. And we'll be looking at just a brief recap of what we have discussed. First aspect, we said you have to understand tax reliefs and incentives. When you know the tax reliefs, the incentives, then you know how to apply them. Then after that, we also, both for individuals and companies, after that, we discussed about the power of record keeping, which cannot be overemphasized. It is important that you keep timely records and accurate records to avoid penalties. Then we also discussed about claiming allowable deductions. You need to be aware that, oh, these are actually allowable expenses and deductions, which we discussed in detail, some of the claimable expenses and allowable deductions. Then we also talked about you structuring your business, looking at it, okay, which one is more efficient for me? Should I maintain a business name or should I incorporate to a limited? Those are part of the aspect that we looked at in respect of how to legally cut your taxes in 2026. We also talked about the sector-specific incentives and grants, where we talked about the agriculture and agro-processing, renewable energy and green technology, women-owned startup. So we discussed that one too in essence. So we also talked about avoiding audit triggers, what can cause audit, what can make the NRS, which it will be later called, to come and look at your books. So we discussed all that, and we also discussed how to avoid such things. Then finally, we went to leveraging the digital tools, ensuring that if you want to cut your taxes in half, you have to leverage digital tools. First and foremost, automatic mandatory invoicing will be rolled out by January 2026. Then Tax Pro Max is already mandatory. It is important that you familiarize yourself with this so that you can legally reduce your taxes. Once again, this brings us to the end of the section. Thank you very much.
Thank you so much, Mr. Akinlabi. That was a fantastic session, and it was very, very enlightening. Once again, thanks for the fantastic conversation and the information you have shared. We are jumping now into the second question and answer session. We have quite a few questions. So I'd like to just speak to all our viewers, invite a friend, share the link, let people know what's going on here. We are about to go into the question and answer session. We have quite a few questions, but we're going to just proceed with each of these questions one by one and see how far we can go. Every question here is very important, and please, as we said, we are already planning another outing of this very same type towards the end of December to help address the challenges when it comes to tax, the new tax bill in Nigeria. So once again, I think Mr. Akinlabi and Madam Kelechi will be running this question and answer session. So I'm going to be firing down on the questions one by one. Okay. So the first question we have here for this session. Okay, I think it's from, she already asked a question. She said, if I have a side gig, for example, if I am a freelancer, would this affect me as well, and how? So that's a question from somebody from Cora. If I have a side gig, for example, if I'm a freelancer, will this affect me as well, and how? We have another question from Precious, which says, with the rise of remote work and side hustle, how will personal income and freelance earnings be tracked or taxed under the new system? So I think those two questions are definitely aligned. They sound extremely similar. So the first was, if I have a side gig, for example, if I'm a freelancer, how will this affect me as well, and how? And then Precious' question is, with the rise of remote work and side hustle, how will personal income and freelance earnings be tracked or taxed under the new system? Then another question was, what will be the penalty if I failed to self-assess myself, just like you said? What will be the penalty if I failed to self-assess, just like you said? Then Vero Ijoma is asking, how will the tax authorities assess what your income is? Is it from total inflows into your account? I am asking because there are times money is paid into my account to make purchases for my company. So what Vera is saying is maybe she works somewhere and the company pays money to her for procurement purposes to procure stuff. So will the tax authorities just look at every single kobo that came into you, every naira that came into your account, and immediately tax you on that? Shouldn't you be able to explain where that some particular sums are not your personal earnings or income? Should I keep going? Akinlabi, should I keep going? Okay, I should keep going, right? So the next question is from Precious again. Will the new 2026 tax reforms make it easier or harder for small women-owned businesses to access grant funding or government support? Will the new 2026 tax reforms make it easier or harder for small women-owned businesses to access grant funding or government support? Cora is asking now, what are the advantages of paying the tax? That's a very good question. What are the advantages of why should I even pay these taxes? And then Veruna asks another question. She says, when a treasury bill matures, the principal is paid back into the owner's account. Will this principal be taxed as a fresh income for that year, since it is a cyclical income which will still be reinvested? So she's Vero's question again. When a treasury bill matures, the principal is paid back into the owner's account. Will this principal be taxed as a fresh income for that year? Since
I can take this one as well.
Hi, Kelechi.
Hi, Yeshua. So,
Hi, Kelechi.
The only thing that would be expected to be taxed would be the income, so the profits on that amount. If that amount has already been taxed before, taxing it again would amount to double taxation. Then you also note that when it comes to treasury bills, fixed deposits, and the rest, that when the bank is paying it back into your account, there's a withholding tax element that is already withheld. So you've partially even paid some tax on it, which you can use as a credit when you are doing your self-assessment, as we had earlier explained. I hope that explains it.
Yes, it does. Thank you very much, Madam Kelechi. Thanks so much. So I think we've addressed that question, and then we can look at the, there's another question. As a sole proprietor running different businesses, how will this affect me? How will this new tax law affect me? That's from King David. How will this new tax law affect me or benefit me? As a sole proprietor running different businesses, how will the new tax law, how will all this affect me or benefit me? So I think those are the questions we have. Would you like me to run through them again? Let me just quickly run through them. The first one from Cora: if I have a side gig, for example, if I am a freelancer, will this affect me as well, and how would it affect me? Cora now also Precious now asks, with the rise of remote work and side hustle, how will personal income and freelance earnings be tracked or taxed under the new system? And I feel those two questions are quite similar. Cora asks again, what will be the penalty if I failed to self-assess myself, like you have mentioned? Vero asks, how will the tax authorities assess what my income is? Is it from total inflows into my account? I'm asking because there are times when cash is paid into my account to make purchases for my company. So would I end up just being taxed for all the money that passes through my accounts? Precious asks, will the new 2026 tax reform make it easier or harder for small women-owned businesses to access grant funding or government support? Cora asks, what are the advantages of even paying this tax? The next question on Treasury bill, okay, Madam Kelechi has answered that. And then the last question was, as a sole proprietor running multiple businesses, how will this affect or benefit me and my businesses? So those are all the questions we have so far. Quite a few, but I'm excited to see how you answer them.
In the first, the order that will answer the questions, irrespective, make sure we touch everything. So I would start with the first one that said, how will the tax authorities assess my income? Is it based on the inflow that comes into my account? Is it every money that comes into my account? So like during the presentation, part of what we discussed about is automation. The essence of automation, having your accounting software, making sure that you're keeping proper records. So if you're asking how the tax authority determine your income, if you have properly kept your record, every inflow that is not income, you can easily explain it out, or it would have been properly classified in your accounting records. Thus, there will not be an issue with that with the government. If the money comes in as an income, there are ways the FRS can detect that this is an income. And that is part of the reason why they are moving to the digital aspect, because the other person paying you the money would have reported it as an income. Now there will be transparency. The FRS can see everything. As you are invoicing a businesses, as a business is accepting it, they are seeing everything through the new automation, the new digital, that's the electronic fiscal system that has been mandated for all taxpayers. So it is essential you key into this, because all invoices now is being digitalized. It's moving away from paper trail. So the FRS will easily be able to trace your income. You'll be able to, oh, this is actual income because the other company would have reported it. That is moving forward with the new tax act. And that is why the essence of proper accounting records cannot be over emphasized. Now, the next, I hope that answers that. The next question talks about how will personal income and side also be tracked? That is from Quora. Now, you need to understand this, that this one too, we also go with the question that says, what will happen if I fail to assess, and now with the government? No. The government have, that is now during audits, they are empowered to have access to what we call the back data, meaning that your transactions that you are claiming to have done, the government sees it. You are the one feeling that the government is not saying it. The government, when they want to do the work there, they will get full results done. So the essence of record keeping, the essence of reporting actual information cannot be overemphasized. That is for that aspect. So it will actually be tracked. The government can see, okay, for example, now you want to get a tax clearance certificate after you've self-assessed. The government will tell you, okay, go and bring your books. That's your state government. Go and bring your books. And then it will even make it easier for them to be able to track whatever is inside those books. Also, they also have access to what we call the bank data, which they will be able to get information. So it is advisable that we don't just believe that the government will not be able to track me. They can only track the one that is coming from my company. No, they will be able to track those side also, because it is being digitalized. Now, also banks will require TIN. That's with respect to that question. Now, the first one, I think from Cora also, is if I'm a freelancer, would this affect me as well, and how? Yes, for example, now for freelancers, they have been included specifically in this tax act, and so it's going to affect you. However, how it will affect you will depend on the threshold. That is whether you have met that threshold or not. The threshold for the exemptions for individuals and for complaints. So if you have gone beyond that threshold of 800,000, you have to do the needful, and also for complaints for above 50 million, you have to do the needful. Another question is, with the new 2026 tax reform, make it easier or harder to access government funds? Compliance is very important. When you are compliant with the new tax reform, then it's easier to access. That is, you must also forget that government, whatever government is giving out, is also limited. So it's going to be based on the number of people that they actually plan for. So, but in terms of the processes, because you are compliant, it becomes easier for you to access government assistance. Then another question that somebody asked was the advantages of paying taxes. Like we said in one of the slides there, now you are part of the process because you are also collecting for the government. You are seeing the whole process. So it makes you have more interest. That is to actually see where your taxes are going, what they are being used for. And part of the advantages, like we all know, what taxes are used for, that is repairs of roads, provided infrastructures and things like that. Those are some of the advantages of paying taxes because those particular infrastructure will still be beneficial for you as an individual, as a business. That is for that aspect. The managing partner has answered the question with respect to the Treasury bill. And then this person said, how will the new tax law affect me or benefit me with multiple business? Yes, that's a good question. With respect to that particular question, you need to understand that when you are saying you have multiple businesses, the question now is for you as an individual. Because, if you are going to declare your profits, by the time you aggregate all these your businesses together as an individual, have you crossed the threshold? If you have crossed the threshold, you make sure you pay. As a company, remember that each company is a separate entity. So it will be treated as separate entity. Make sure each of those entities are compliant. I hope that answers that question. Is there any other? Yeah, sure, please. Is there any other question that?
Yes, thank you very much, Mr. Akinlabi. Just a few. We have a few additional questions. We may need to move them for another day, but just two things that came to my mind. So there's this question that Vero asked that I think it's was it Vero that asked that question, and the question was about sometimes the company that she works for pays money into her account for her to maybe the company needs to buy diesel and say, hey, Vero, go buy 1,000 liters of diesel, and the company pays money into her account. So how is that company going to report it that it doesn't appear as income to her? And that's the first question. This is coming from me. The second question was, what would happen in a case where there was a wrong reporting? Let's imagine somebody was handling something and then there was an error when somebody in the company that was maybe filing that into the system now erroneously filed it as maybe an income to the receiver rather than funds that were being used to do an assignment for the company. Is there sufficient medium to redress these types of issues? Now, why I'm asking is because I know business owners have had issues with tax offices and ended up shutting down the entire business. They just shut the business down. They tried to get redressed. It wasn't working. They decided to shut the business down and start afresh. So will there be ample, and we are all in Nigeria. We know how things sometimes play out. Will there be ample room for redress? Oh, sorry. Can you hear? So would there be ample room for redress of these types of matters? Then the last question that came in is, I know that most people don't have a team. They don't have a tax identification number. Most people don't have. Most people in the informal sector working with SMEs and small businesses where they are currently not being taxed and everything. When the company does, for instance, a young girl that works in a supermarket earns 80,000 naira, is paid that cash. She doesn't have tax, or maybe earning 100,000 naira, doesn't, and maybe her earnings now crosses that 800,000 naira threshold you mentioned for individual earnings. What should they be thinking of doing right now ahead of 2026? So those are the three questions. One, if the question that the lady asked, how does her companies record it so that it doesn't, the money that they send to her to go and do purchases for the company doesn't turn into income and she gets taxed. Would there be what if there's an error, a sender erroneously labeled a payment as something that would accrue as an income? Will there be sufficient room to redress? Do they have enough mechanisms to redress this on a national level? And then finally, people that have never had a thing in the past, they've been earning salaries and they've never paid taxes, never had a TI thing. What should they be thinking of doing immediately in the next 2 months?
Thank you very much.
Thanks, sir.
Last question respect to people that don't have like I said, the introduction of the Nigerian Tax Administration Act 2025 is to make sure that it brings in more people into the bracket and ensures compliance. So for people that don't have team and they've never paid taxes, the advice to you now would be to make sure you get your local tax station to do the registration, or consult a professional to assist you as to how to do about it. So if you visit your local tax office, if you need the services of accountants, it's good you also get in touch with them so that they can give you proper assistance how to do about that. Now, the second question, if I
get it right. Hi, Mr. Akinlabi.
Wrong reporting and
can you hear me?
To address it. This, because the system is now digitalized, reported something wrongly, then you needed to address it. That's how will you address it? Am I right?
Yes, yes. But could you speak up a little bit? We can't hear you, Mr. Akinlabi. Could you speak up a bit, please?
Sorry. Can you hear me now?
Yes, way better.
Okay. Let me take the first one again, since you said you didn't get it. I said most people, with respect to the ones that don't have TIN and never pay taxes, I said first and foremost, with the introduction of the Nigerian Tax Administration Act, which is which is enforcing compliance, which is making sure that people are compliant, which is making sure that it's bringing more people into the tax bracket and generating more money for government. I said, first and foremost, the first advice would be to visit your local tax office there, so that your local tax office to get registered, that is for your team, or you consult a consultant for proper advice as to how to go about that. That is for that question. Now, for the second question, that is wrong reporting on income and how to address it. That is, you enter the wrong transaction into the system. And now, because the system is now digital, now that is the essence of automation. Because the system is digital, it makes it even easier to correct because everybody can see the processes. If I reported something as income and it's supposed to be an expense, all I need to do is go back to my software and change that. When they want to do their investigation, they will see it because the process is transparent. And that is the essence of we encouraging people, make sure you digitalize your business before they roll out. I think that answers the second question. So it's easy to correct it. Please, let's take that. It's easy to correct it under the new system that is being deployed. Then the first question, the network was breaking. Yeshua, please can you take that again?
Okay, the first question. The first question was as regards the lady that said sometimes her company pays money into her account for her to make procurement. What will be needed? Can you hear me? Okay. A company sometimes makes, she asked the question originally, but I think maybe we didn't really look at it carefully. Or I didn't ask it very well. But her concern is her company pays money into her account and asks her to go and to make procurement on behalf of the company. How would that company capture that on its own end that it wouldn't appear as income to her, as if she's actually the one buying, supplying the thing to the company?
So the question is, the company makes payment to me, for example, that she go and buy fuel.
Yes.
She's now asking that how will the company report it? Yes, it's very straightforward. You tell me to go and buy fuel. Now you are sending a staff instead of paying the vendor. You put it there in your record, in your narration, depending on the accounting software that you're using. You put it clearly stated there, payment to social staff to go and purchase fuel. Don't forget that when the staff purchases that fuel, there will be documentary evidence to show that this was actually what was purchased. Not showing that maybe the staff made some money. Because, for example, I can send 80,000 to someone to go and buy fuel. Then the person brings the 80,000. During an audit, the 10,000 will be added. So let's get that clear.
Okay.
From the company, you sent 80,000. Now you put on in your narration fuel purchase, irrespective of the staff name. And then by the time they come for their audit, when they look at it, they say, oh, this is 80,000. Where is the receipt? You see that suffices.
Okay.
So the company will report it as a
Okay. Okay. Great. Thanks a lot. Two questions popped in. One, I think that those will be the last ones we can take now. The first question is, would farmers, smallholder farmers, and I know this is a very interesting question, will farmers in the village be required to pay tax? There are farmers, Mr. Akinlabi, that at the end of the year, they can even harvest of 50 million. So would farmers, rural dwellers be required to pay taxes? And how would they capture them? Then the next one is a very interesting question. There's a 15-year-old guy, boy or girl. He or she is a content creator somewhere in Abuja and is raking in, say, 10 million naira every month. But that guy is 15 years old. Does age provide an exemption from this new tax bill? So would age, a 15-year-old young man or young girl as a content creator bringing 10 million every month in revenue and income, but is 15 years old, is viewed to be, what's that, juvenile, what's the word? Would that young child, that's less than 18 years old, would that child also be liable to pay taxes? Does a minor have to pay taxes, even if the minor is bringing in a lot of money? I know this, and the first question was, how about rural farmers, smallholder farmers in the rural areas, illiterates, they can't speak a word of English or minimal English? Would they be required to pay taxes? And how on earth would we be able to track all of that? The two final questions for today.
Okay, sorry, can you go over that question again?
Okay, so the first question was, would rural farmers, farmers in the rural areas that, in many of these cases are not very well educated, they collect cash, would they be required to pay taxes? And if they were, how would that be managed? How would that process be managed? Then the second question is, let's imagine there's a minor, he's 14 years old and he's into content creation and his channel goes ballistic and he's raking in 10 million naira. This minor, under the new tax law, is he exempted from paying these taxes, or the taxes will accrue whether he's a minor or not?
Very interesting questions. Interesting questions. We'll take them one at a time, and I will respond in conjunction with my colleague.
Okay.
Remember that there's a threshold for taxation. There's a threshold. So these petty agricultural farmers in the villages, are they making up to that threshold? If they're making up to the threshold of 100 million, then there's no exemption. There's no exemption for their taxes. But what are the realistic possibilities that they are making up to that? The ones that are making up to that would make for example, in the north, they are planting vegetables and fruits, and then they're exporting it to other places like Lagos and the rest, and they have very big farmers. Those are not petty farmers anymore, right? So for the petty ones, that as you've mentioned, there's a threshold, and then you also know, for just like saying the market people, remember that there's the local government that also has levies on all those people and the rest of them. If you're talking about federal taxes, state taxes, there's a threshold for these payments. Again, most of them would not have incorporated companies. It would be personal income tax. The law doesn't exempt anybody from personal income tax. So it would also now. So the first response I had made would be based on limited liability companies, or if they have incorporated businesses. Now, for under personal income tax, they're doing this petty farming. The law expects them to pay their taxes, but even the tax authorities understand, and we all understand, that there's something called being under the radar. So it now depends on your own appetite for risk. It depends on your own understanding of compliance. And also remember that we are a self-compliant country. So you have a self-assessment. You're supposed to, you owe it. You have that obligation of filing your taxes. So as they continue to do this business that they're doing in the rural areas, it is expected that if they are as good citizens, they're expected to file personal income tax. When it comes to limited liability companies, there's a threshold. Majority of them probably don't have limited liability companies, but if they do, I would imagine that they would fall below the threshold. And for the 16-year-old or 15-year-old, the minor that is doing business, our tax laws do not recognize age. There's no age limit, especially when it comes to personal income tax. I have not come across any age limit. Thank you.
Thank you, Madam Kelechi. Ms. Akinlabi, you have anything to add before we wind down today? You need to unmute.
Sorry, that will be all from my side. She has covered this.
Excellent, excellent. I want to thank you, Madam Kelechi, and you, Mr. Akinlabi, for a fantastic first session. We will be having another session towards the end of late December. We'll call that our Fire Brigade tax session, where we are trying to help people navigate in the last few days within which they are under the old tax bill. Once again, thank you very much to our amazing speakers. Thank you for my team that has helped put today's event together. Thank you to all our viewers and our participants. The questions we have received, amazing questions. We will be sending us an email. I wanted to ask Kelechi and Akinlabi, is it fine? Because I know quite a few people have already chatted me privately asking for your contact details. They'd like to engage with you guys and your organization. Is it fine if we send follow-up emails and provide your email addresses to the participants, to the registrants for today's event? Is that fine, Madam Kelechi, Ms. Akinlabi?
Yes, that is fine. They can contact us via our official emails.
Great. So we'll be sending out emails in the next 24, 48 hours. And we'll be providing contact details for Madam Kelechi and Mr. Akinlabi. They are two very solid experts with WTS Blackwood Stone. I want to thank everybody for attending today's event. We are a little bit above time, but I think we're just like 5 minutes less than, okay, well, just about a minute above time. And we look forward to us having another exciting session just like this very shortly. Once again, thank you, Kelechi. Thank you, Akinlabi. And Kelechi, can you just give us a last word, like a piece of advice to all Nigerians?
Okay. So what I would say is there's nothing to be afraid of. There's nothing to worry about. Most of the questions that have been asked, I found myself emphasizing the need for people to understand that we have an obligation to self-assess and self-comply. As citizens and as taxpayers, I would say it's good to be compliant and to do the right thing. And if you arrange your affairs properly, so it's not a crime, it's not illegal to arrange your affairs in such a manner that you minimize your taxes. There is nothing wrong with that. It is understood by the tax authorities and is understood even globally. So I would say, just as Akin had emphasized, keep your records. Very important that even if you have a small business, you start with the habit of record keeping, because the tax authorities, they are closer than you think. They have more information about you than you think, and they have more access than you think.
Yeah.
And I think that's what I would say. Thank you very much.
Thank you so much, Kelechi. Thank you, Ms. Akinlabi. Enjoy the rest of your day, everybody. We'll be sending out emails. Ms. Akinlabi, what does that say hi before we shut down?
Thank you very much.
Thank you so much. We appreciate your time. We know how busy you guys are at WTS Blackwood Stone, and we appreciate the time. So everybody, you've heard what has been said by our tax consultant experts in the field. It's not something to be afraid about. You can get yourself in order ahead of time. Thank you very much to everybody. Enjoy the rest of the day. Bye-bye.